I have to do this just so everybody can actually hear me. Hi, and I'm probably pretty low right now too on top of everything else. Let me just get this actually fixed up here. Boom, boom, boom. Wait, there it is. That's me. That's my stuff. All right.
Want to restart?
Perfect. Yeah, well, it was a bit of a slow one. Hi, how you doing? Good that you're here. Good to see you. We're back. We're back. This is Vishal and Company for yet another week. It has been an insane week. We've had a crypto crash. We've had markets doing just the craziest shit. Europe is immediately heading into lockdowns. Kyle Rittenhouse has been let free. What the fuck is going to happen now? Tesla's up. Like, Jesus Christ, it's the end of the world. It's the end of the world, guys. Vishal, tell
Dogs
us
and
what's
cats
going on,
living
man.
together.
Yes, exactly. Cats and dogs. It's insanity.
Yeah.
It's insanity.
Yeah.
Vishal, let us know what's happening on the charts and in the markets.
For sure, Galen. It's just been one of those weeks when we were off air. I was saying, hey guys, I don't really know what the hell to talk about. It's just been a weird week. Market wise, we've still been playing we're testing these previous record highs, but yesterday we closed above previous record highs, making a new record close, and then today on the S&P we actually printed new record highs before selling off here. So I'm still, a bit cautious at these levels here. We're not really getting that nice momentum push that a lot of people want to see. But I mean, if we do, it's quite crazy. It's like the markets haven't given us a bit of a pullback yet. And I think that's what people sort of want to see. Take a look at the NASDAQ though. The things are a bit different on the NASDAQ. On the tech side there, we had a pretty strong new record close yesterday and then new record highs today as well. You're seeing here on the daily candle, there is a bit of a pullback right now. So we'll see how that plays out when the markets close. I'll just show you guys a map here of the S&P 500. So, a lot of things are just random. You do have NVIDIA that's doing quite well today. Facebook is up as well. Tesla is up as well, but it's still, I would say, it's a mixed bag right now. Energy, as you guys can see, is dropping, and we'll talk about that actually because I want to go over a few charts here. Let's take a look at the Dow and the Russell. So things are a bit more different when it comes to the Dow Jones. It's a red day on the Dow Jones. However, we are retesting previous breakout zones, so we shall see. If buyers are going to step in. Should be in this area, and if we do step in here, then you'd see the Dow following the S&P and the Nasdaq. But I wouldn't be making any trades just now. I would just wait till next week. Russell 2000, same thing, right? We've just pulled back now, and we're retesting a previous breakout zone. So two different stories going on here. You have the S&P and the Nasdaq making record highs, whereas the Dow and the Russell 2000 are not playing along, and we'll have to see, which markets are correct. Is the Dow and the Russell going to catch up to the SPY and the Nasdaq, or are the SPY and the Nasdaq going to sell off to catch up to the Dow and the Russell? So we'll have to take a look at other markets just to sort of understand the flow of money. I want to look at Europe because, as you guys have seen, or maybe have heard, that Austria is back in full lockdown. Talk is that Germany might join as well, but the German market's, a bit of a red day here. I think the more interesting case is actually Italy, because Italy's cases have been rising, so they are talking about perhaps Italy is going to follow along, and then Spain, which is actually dropping quite heavily. So maybe we're going to see Italy and Spain announce some sort of lockdown, maybe over the weekend or something. I don't know. I'm just saying that, hey, if we're looking at the markets, Spanish markets and Italian markets are a bit freaked out, whereas the French markets, okay, maybe you have something here with the UK as well. The FTSE as well is falling a bit, but the German DAX, again, nothing really as crazy as I would say the Italian market here and the Spanish market here. So we'll keep our eyes out on that. In terms of risk, we are seeing money run into bonds, which is generally a sign of money running into safety. Even though rates don't pay you much or bond yields don't pay you much, the asset allocation model is still risk on is stocks and risk off. You put your money into government bonds, which are technically seen as the most safest assets. And then quickly here, Gold, not much happened in gold. It was sort of a dull week where we're still ranging. I still like it above 1830. And silver, come on, you silver apes. Let's hold the line here. Let's not let silver fall below 2450 because I don't want to get stopped out on my logs. So let's hold the line here, boys. Like put that image of William Wallace, Mel Gibson. Hold the line. Let's do that. And then finally here, let's take a look at oil. And this could be maybe because of lockdown. Galen, you remember way back in the day, me and you were recording when oil hit zero or negative, I think, and we're like, holy cow. Don't know if anything like that would happen unless the whole world does a lockdown again, but oil beginning to drop a little bit here, and perhaps it's a bit of nervousness due to what's going on in Austria, and maybe if that.
What's Western crude sitting at now?
Western crude is at 76.50, 76.60. Let's go there. Let's call it that. That's actually my CFD. If I give you the exact price, 76.14. So it's a bit lower than my contract for differential. And then Brent crude, which is UK, is trading at 78. Although I believe these are closed. No. Oil's still trading right now. My bad. But my CFDs are just priced a little bit different, but it's the same chart, same structure there. So a lot of people, I think, are just watching to see if oil is now beginning to reverse. There might be a bit of a pullback here for oil, and I think let's just watch what happens in terms of the lockdown side there, because that could be a warning sign if oil's dropping. And again, I'm just saying, let's watch what happens in Italy and Spain. Just looking at the money flows, if there are going to be more European lockdowns, the charts here are sort of telling us that there are people in Spain and people in Italy that are a bit more freaked out than the people in Germany, the UK, and France. Okay, maybe not the UK to some extent. So yeah, let's keep our eyes on that. It has been a bit of a weird week, like I said. A lot of things happening, and the markets are now digesting, I think, what might be coming out in the future. Meanwhile, the dollar is actually popping a little bit as well. So another sign of risk off of money running into safety assets. So when I see the dollar rising and when I see bonds rising, it's time to be a bit cautious.
Absolutely. We had some interesting news this week in regards to the infrastructure bill, the $1.9 trillion infrastructure bill, which was basically the election platform for Biden to a certain extent. His party has managed to push it past the House, even though McCarthy spoke for 8 hours to try and stall it out. Jesus Christ. You'd think they'd have something better to do. Anyway, it's going to Senate, but because the Senate's a 50-50 operation, it's most likely just going to bounce right back to the House and not going to get passed. So are what we've seen in the markets a reflection of that? Since the Dow is actually based on fundamentals and not pipe dreams like fucking NASDAQ, and because the idiots are still buying Tesla, like... Where do you think we're heading over the next 6 months? I mean, we've got a lockdown happening in Europe. China's still not out of the economic hole that it's in right now. Evergrande is barely scraping by to make its interest payments. Other or real estate developers in the country, large ones, are threatening that they are also going to start missing their payments. And since China is one of the largest consumers of the resources that, for instance, Canada produces, the wheat that the United States produces, and it stops actually, purchasing, are we going to see like a stall out? Because, inflation is still hitting. We've just had that disaster here in BC where our infrastructure is taking a huge hit. Dairy farmers are being told dump their milk, which is only going to lend to increased sales costs in the grocery store, which, as far as inflation goes, groceries are some of the highest inflation products anyway. This is going to really start to hit home, don't you think?
I don't want to be that guy, man, but I've sort of been warning about this for quite some time. I don't think we're out of the woods yet. I still think it's going to be quite bad, and it's because of the money policy, right? That money printing that happened, it's going to come to hit us eventually. Now that economies were opening up, you have that money velocity going, but
the money is rushing into the stock market. It's not actually going in the economy. It's being pooled into a very few places,
Yeah,
which
exactly.
is
Yeah. So
absolutely damaging to what's going on right now.
that's the
Musk.
thing, right? Like that money, I think, is going to run into the stock market, into cryptos, into other stuff, just because they're trying to hunt for yield. Generally, during inflation times, markets do go up because the people are trying to beat that rate of inflation, and markets, move a bit faster. So people tend to say, hey, that's the best place to get a quick gain to beat inflation. Gail, we talked about this, about the House bills. Like the last administration, I think, 7 trillion in 4 years. This current administration's in 10 months, and they've spent 6 trillion now. Money, this is the reality. It's like it seems like the U.S. is on life support. It's just going to need trillions and trillions every few months just to sustain itself. And if you're the Fed, if you're looking at this kind of stuff, right? This is the debate about raising rates and tapering. If the government bill is quite large, and if consumers are borrowing a lot of money, then raising rates could cause governments to break, and could also cause another recession, right? If consumers can't sustain that type of higher interest rates, right? So
well, absolutely, and the yield that they've been searching for, which they're technically not receiving. We have a bunch of paper millionaires. This is what's going on. So
until you close your position,
until you close your position, you're not a millionaire. I'm sorry. And when you start to close your position, you're going to see just how fucking quickly the stock market is going to crash. So basically, we're fueling this whole thing. The infrastructure bill, the money that has given out, that has just been passed on to the markets. Everybody's giggling that they're just so wealthy. But when bread costs $20 a loaf, you're going to have to start paying for it, rather than just saying that I've got stock receipts that make me rich. You're going to have to take that money out of the market, and it's going to cause some pretty serious shit. It's been an interesting concept. Some auto analysts have now started suggesting that traditional auto manufacturers actually split off their EV business, spin it off into a separate company, because hey, they're getting billions of dollars when the IPO on the market. But what people don't understand is this is just throwing fucking fuel on the fire.
Yep. No, you have Tesla, it's one of those markets, dude.
Which to even come close to the valuation it currently has, it has to generate a performance more than 100% better than what it's doing. It has to manufacture over 44 million cars and trucks and big trucks and vans a year to even come close to what it's currently valued at. This is a pure case of the emperor wears no clothes. Now, Musk is laughing all the way to the market because he's using this fucking company as collateral to fund SpaceX, which is currently just usurping another government agency from doing space research. It's absolute bullshit. We have a class and a culture of rainmaker capitalists which are pissing all over the Commonwealth and basically taking all the money away from the people that actually need it most. And I'm not talking about charity here. I'm talking about the money velocity, about the fact that you and I, when we go to our bank and cash our paychecks, we spend all of it. And it goes back into the economy, pays for goods and services, and builds, right? Whereas these asswipes buy super yachts.
That's true. It kind of, the whole situation that's happening right now kind of reminds me of the story from just an article, a news article that was written a while back. I think it was 1940. And they gave an example of this guy buying stocks. And he called his broker, and whatever the stock was, it was trading at $10. His order filled. He called again. He saw it went up to $2. So I made a profit. He put in another order, and he got it at 12. And then he was like, man, I'm really good at this. He called the broker again. Now the stock is at $30. He's like, let me put in another order, and puts in at $30. It goes to $60, and he's like, wow, I am freaking rich. Let me sell out and cash in what I have. So he proceeds to call his broker and say, I'm ready to cash out. Can you liquidate my position? And the broker then says to him, we can't liquidate your position because you are the market. There's no more liquidity available. And he had kind of gotten used to this free-flowing liquidity that didn't stop coming through. But the issue is, once you take that life support off.
Yeah.
Kind of what you're alluding to is
Yeah.
there's going to be a lot of paper losses that turn into real losses.
Yeah.
And some markets are going to be more liquid than others.
Yeah.
But there are specific markets that I won't mention that are less liquid than other established markets. And some people will kind of figure it out then when they're calling their broker.
See, the debate about that, though, is like with the Fed's policy, a lot of people are claiming that, the money is going to the banks, and then the banks are the ones trading the market. So they're like, they're ensuring there's always going to be liquidity. They're going to ride this party until the party's over, pretty much.
Well, of course, just like they rode the housing market.
Yeah.
Fucking same thing. Just like J.P. Morgan rides both sides of silver. Fucking assholes. Oops.
If you kind of look at, I think she's the poster child of the current market is ARK Innovate fund. So if I compare Q3 2019, their AUM compared to today, they had $4 billion in assets in 2019, and as of 2021, they have close to 41 billion in assets, with a peak of 53 billion in Q2 2021. So money is definitely flowing into the market, and specifically these very high innovative companies, or anything that you attach AI tech, any tag word like that is selling pretty well. So I understand all the
sectors with no real performance or products.
Yeah, with nothing tangible to them. Most of them with nothing tangible to them.
Yeah. But they're growth stocks, man. It's supposed to be better in the future.
Do you know what? For it to be a growth stock, there has to be some growth backing it up. If I wanted to if we came up with a business plan, we went straight to the VCs and told them, I want to sell electric cars in the next 15 years. Here are my quotes, blah blah blah. And if they say, oh, you're silly, what the hell is this? They'd be like, hey, there's a public company with the same business model, in the same situation, we're same development stage we're in. Why are they crazy and we're not? We should be able to price at the same value. So, J&J splitting up and General Electric splitting up. It's just GE, sorry. They're just like, hey, you know what? Everybody's doing it. The conglomerate days are over. Now you have to focus on a specific niche. You can't have these large industries, large industrials, because they're so confusing for the market. Just spin off the insurance branch and boom, $1 million valuation. Spin off the electric, the energy branch, because they're spinning off into 3. Spin off the energy branch and boom, you got another $1 billion valuation. And I'm like, you know what? If you're going from an assets of management from $4 billion in 2019 to 40 billion in 2021, there you have a good marketing team behind you. You just continue to raise the cash until the party stops going. Kind of what Vishal is alluding to. If people continue to dance and the musical chairs continues, I'll stop until the last chair is taken.
Which they did in 1929.
Oh yeah.
They danced like a motherfucker, and then everything just disappeared. Music stopped, floor fell out, and then boom, chairs disappeared.
The thing is, I don't want to be that guy from the 1940s who called his broker and there was no one on the opposite side of that trade.
Yeah.
So if, for example, the paper millionaires you're talking about, I emotionally, I'm attached to that position. Now I'm a millionaire and I want to cash out. The difficulty of the fees aside, it's just the liquidity of that asset that you hold. Might be there right now, but when you actually try to execute it, you're gonna have to take a discount, and sometimes the discount will make you straight back to
discount.
square one.
And I should probably mention this just because I have the ETFs, the exchange traded funds. I know a lot of people like to invest in that, and I don't know if you guys have traded them, but they're quite notoriously difficult to sell at very volatile periods, and especially if things are tanking, I think it's going to be even tougher to sell. And I believe that's even what Dr. Michael Burry has said as well.
Yeah, I was about to bring him up. He actually, liquidated his entire put contracts.
Yeah,
in
yeah, he's
Tesla
not short
and,
anything anymore.
Which
and
makes
ARK.
sense right now because it's fucking insane. There's no reason to lose your fucking shirt. And I think right now he's just disgusted with the market, and especially when Musk turns around and calls him a fucking broken clock. Musk, you
Yeah.
fucking idiot, fucking charlatan, fraud, braggart, dork.
Was
And,
yeah, he liquidated a lot of his more aggressive positions. So
Yeah.
all his call options,
because the
his put
market, it's
options.
like just before the housing crash, just like the banks were fucking fueling it to reverse
True.
this trend. It's happening now, and Musk has got institutional investors, everybody. They're fucking playing the game. And what pisses me off is I'm not really sure if they're too stupid to see or they're fucking
yeah.
malicious and they're just fucking everybody, but they know at one point the whole thing's going to crash. But they're probably going to get out well before then because, they'll do dark pool trading. We'll never fucking see it happen. And then they're out and while the rest of us take a bath.
True.
Now, speaking of
True.
which,
He's already. Yeah,
Sorry.
he's already started. He's already just started taking the bath you're talking
oh
about.
yeah, totally, right? Just to cover his fucking loans for SpaceX while his brother commits fucking insider trading. Now, speaking of discounts, Joseph, I hear that there's a bit of a shit show going on in the crypto market right now.
Oh yeah. I mean, you can. You really got to put your Ed Start. Really got to put your Ed Start Game of Thrones memes away because regulations are here. They're not just coming anymore. I mean, the infrastructure bill, whether it gets bounced back. Let's start with the Americans first. The infrastructure bill, it'll get bounced back and forth. If it does eventually end up as law, what it's eventually going to mean, and they put this into a small, tight little corner, is that they're going to basically funding this with your crypto gains for the most part. The tax increases will have raised $28 billion to fund the infrastructure plan. So basically, it's going to increase requirements for crypto brokers and investors to report transactions to the IRS, which I find rather curious, I suppose. But I mean, I don't know, if you're going to tax something and it happens to have a little bit of transparency to it, like it's going towards something which, we might actually use instead of, I don't know, padding Barack Obama's yacht. And I don't know, I'm kind of all for it. I mean, that's what you want to pay taxes for. Now, on the Canadian side, things are actually getting a touch more interesting. I'm not entirely sure whether this is Canada-wide or whether it's just Ontario, but I do suspect it's Canada-wide. But we're going to start seeing some interesting changes to the regulatory climate up here as well, to the tune of tiered limits when it comes to trading allotments. So for the average investor, it's going to be like $30,000 per year for both buying and selling. The next step up from that is $100,000, and then it's unlimited for accredited investors. We're going to start seeing that probably starting next week. I'm saying Monday, and quite frankly, I'm a little curious as to how the markets are going to respond to that kind of information when it does finally happen.
Interesting. Is this all markets or just crypto?
It's crypto. This is specifically for crypto.
Okay.
So it's kind of, is it supposed to stop people from excessively trading, or is it?
It's supposed to stop people from being idiots. Basically, this is nanny state stuff. This is to stop grandma from putting all of her life savings into like the next squid coin and pulling it and losing it all. But conversely, it also stops, I don't know,
the small guys from making it big.
Yeah, small guys from making it big. I'm not going to be able to put $1,000 in the next Shiba Inu and come out a millionaire. It's just kind of annoying because I'd like the opportunity to do that. I don't know.
There is, again, there's a similarity in America. We're in Canada, I guess, we're sort of lucky as being traders here. But in the U.S., if you have less than 25,000 in an account, you can only make like 3 day trades a week. Hence why a lot of people there like to trade, say, cryptos or Forex or other stuff. The government there says it's to prevent people from making crazy trades with their smaller accounts, whereas other people see it as, hey, it prevents people with smaller accounts from making it rich. So it's, it's one of those things, man.
I think it can be attributed to both sides. I mean, there is a regulatory effect that does help temper volatility when it comes to stupidity, which we seem to have an unlimited supply of, right? But as you said, there is probably the added benefit, if you want to look at it that way, for institutional investors
Yep.
and accredited investors to always have the upper hand when it comes to
Yep.
the markets.
Yep. If you're rich or good,
I mean, it just proves the point to a certain extent that there's always a house, i.e., as I mentioned before, J.P. Morgan playing both sides of silver. Like, you got to play one side or the other, man. I just ethically, really, seriously, if you're playing both sides, then you're just fucking people that are investing in that don't have that option, right? I don't know. That's just me.
Let's see. Let's see what happens. I mean, I think I'm with Joseph. I want to see how the reaction is next week. Bitcoin did break below this support level here, and it's under 60K again.
Yep.
And you're sort of seeing the retest see some sellers, but generally, if I'm trading something like this, you would expect to see that retest just like that, and then generally a sell-off. And just for comparison's sake, very similar to oil, right, which broke down its support, retest, and then you saw this big red candle. So that's what I would be expecting, unless the Bitcoin candle does close back above this 58K zone here. So let's see how the reaction is next week. It's an interesting one.
Now, Joseph, you mentioned there's a particular coin that you're interested in right now. Which one is that?
Oh, yeah. There's actually a couple coins I'm interested in right now. It's actually not any. It's not actually only trading on a few limited exchanges, but it is a privacy stable. It's a privacy stable coin called Haven, the Haven protocol. They've had a few bumps in the road when it comes to development, and they've actually just put out Haven 2.0, or they're in the process of doing that. And quite frankly, I've never heard of anything quite like this. Like a stablecoin which has Monero's hiding capability.
Mm-hmm.
Like it uses more or less the same functionality as Monero, but it's actually pegged, and I think it's actually a burn coin specifically to keep it around the $1 mark. Like
so they take coins off the table to keep the value where it's at?
I think that's how it works. I need to have a deeper look.
So like Shiba Inu, somewhat, but with a purpose.
Yeah,
okay.
I think that's how it works.
Okay.
But it's I don't know. It's a fascinating idea. I don't know. It's one of the ones I had a serious look at and was like, this is actually really cool, because it provides you with the stability of a stable coin, like a 1-to-1 stability, but it allows you to hide your transactions from your nosy neighbor. Like you can't just go to a block explorer and see what you're buying.
I got you.
Whatever happened to Monero? Is that still around?
Yeah, it's still around. Not to mention your nosy government.
Now,
288.
Beyond the bloated state of, let's say, psychedelics and the EV market at this point in time, both of those being the naked emperor parades, what markets do you guys, and I'll start with TK, feel are still running closer to fundamentals and deserve a look if you're actually maybe not wanting to accrue huge amounts of value, but not wanting to lose your shirt over the next decade?
That's actually something I've been thinking about a lot over the last year, because although I might not be making any purchases, I'm always kind of looking, always kind of, for lack of a better term, hunting or flipping rocks. And I kind of realized where the market is now is kind of what you alluded to. All the growth aspects are either fairly priced or overvalued, and everything on the opposite side is just completely being neglected. So where it was completely being neglected, but right now people are rotating. So stuff like the banks, utilities, railroads, that kind of stuff is now, people are buying into it because of the fundamentals. And more recently, people are buying into insurance as well. Insurance companies, and well, I mean, with BC, I kind of get, I get why people are doing that. Some of them became a discount, and a lot of people going into the agriculture space as well.
Oh yeah.
So it really depends where you're looking. But I would go to any business that, even if it's a quote unquote high growth company like Apple, if you think it has longevity and you think the price is attractive, I think it's a good bet.
Yeah.
No matter what as or what field it's in or technology or whatnot, I think it's a good bet. If you go on the opposite side and you're trying to find something more tangible, then it would be a Barrick Gold, some of the gold
Yep.
producers, or Sandstorm, which is a royalty company in Canada
Mhm.
that focuses on gold but gets royalties. So it's kind of a risk reward profile that's better than most gold manufacturers. So yeah, that's how I would play it. I'm playing it right now.
That
There's
makes
no
sense.
specific sector that I've seen that's really attractive
Cool.
outside of Turkey.
How about you, Vishal? Where do you sit on this?
I'm very similar to TK. I think you want to look for big companies that pay dividends. I think dividends are going to be, technically, the yields from some of these dividend-paying stocks is better than bond yield. So if money's running to safety, I mean, hey, you might as well buy some of these large companies that pay dividends. And obviously, you have to sort of pick and choose because some of them might not do well if certain things happen. And this is why I think the best dividend type paying stocks are generally the utilities, right? Your energy companies, your Fortises, and people are always going to use electricity. People are always going to use gas, and generally people run to utility as safety. And I just want to say, I think, throughout this year, since markets fell in February, the Oracle of Omaha, the largest position he took, or the new position he took, was in natural gas throughout this entire year. And some people laughed at him, saying, "Oh, what the hell?" But a few months later, you can't complain, right? I mean, I think he sees the same thing. You might as well be in utilities or something that people are always going to be using. Usually, these utility companies pay dividends. It's a safe pick. That's what I would be doing. And in terms of sector-wise, I'm a bit biased, right? But I do like the commodity space, and I do like agriculture. Nothing to do with the fact that I write the agriculture sector roundup, but I think it is one that no one really pays too much attention to, and I think there's real fundamentals there. And if you live in BC, you sort of saw the effects of what a climate crisis can do, and that could impact other parts of the world, obviously. And I also think just commodities in general are cheap compared to other things. And if you are like me, who believes inflation is going to still be around, then I think hard assets and these commodity things are cheap. I just want to ask you guys, we talked about this yesterday, but cannabis looks really cheap compared to everything else.
It's a viable industry, but
Right?
it's still fucking in dreamland.
Yeah, it's a tough one. It's a tough one because it looks cheap compared to everything else.
Well, yeah, but
not
it's
having a
still
good day.
completely fucking distorted to its own performance.
Right.
That's true.
You can't
There's
tell me
also too many
canopy is
hooks in
anywhere
it.
near what it should be.
There's too many hooks in it too. I mean, you got a lot of these small base companies. I mean, you're not going to see any breakout until they find a way to differentiate themselves from
Right.
this pack.
Yep.
I mean, if you're looking for doubles and triples, you don't look at cannabis anymore because the way Health Canada set up the product. I mean, like you go into a dispensary and they're all the same packaging, and you have to actually have to flip over and look at it. Next, you have to look at, what company is this? And what subsidiary company is this?
That's true.
Now,
That's true.
Joseph, you know how I feel about crypto, but and just in case you're happening to be going there for your recommendations, but however, if somebody were to, and if you are going into crypto and suggesting that, how would they do it safely?
How would they go into crypto safely? I would probably suggest going with a company which provides an aggregate. Instead of actually buying the coins themselves and going through the rigmarole of actually owning crypto, which is buying the wallet, keeping it safe, etc. Go with a company like Grayscale Bitcoin Trust, which gives you access to crypto without the problem of actually owning it. It's basically a company which functions like an ETF before ETFs can actually become a thing for down in the United States. Now up here in Canada, we have a couple of Bitcoin spot ETF options, which you could probably look into. Now, when it comes to actual stocks, my knowledge itself is really relegated to actual book knowledge. I've read a handful of books, and I've got a handful of ideas, and I have not put them necessarily to the test yet. But I'm kind of with Vishal because, well, honestly, Vishal sounds like he's going along the Ben Graham route of you pick the larger company, the safer bet that produces dividends, probably with a probably with a decent PE ratio that isn't bleeding out, as an idea.
Yep.
And I don't know. I don't have a lot of time to pay attention to all these things, regardless of what I do. So, I mean, when I get into it, it's probably going to be in index funds. I'm probably going to throw some money in indexes.
There you go.
Because I'll look for the ones that stand out, the ones that pop out to me, the ones that look to be going on a run, and maybe I'll throw some cash their way after I have a quick look at their fundies.
I'll just throw this out there. This is not like a recommendation, but foreign markets, right? There's other markets around the world. Some people, and again, this might sound crazy. I'm not saying this is a recommendation, but a lot of people like the Japanese markets because their companies are very, let's say, I guess, boring per se, where they're mostly value stocks. They pay dividends. They don't have much debt. And they're run quite well, and the central bank there is buying the stocks, so you can, if they're buying, you don't bet against them. But some people like some of those companies, just the way Japanese companies are generally run. They're more value sort of based, where dividends, low amount of debt, and good management. So that's something, and they don't go around. There's no Canon or Nikon listings in other parts of the world. They like to stick around in Tokyo and the Nikkei. So that's, emerging market, not emerging markets. Japan's not an emerging market, but foreign markets, always take a look at what's going on there. But obviously do your own research, and, it's good to know the lay of the land before you invest there.
Well, there we go. And just to throw my own 2 bits in, because I just can't resist my own opinion.
Tesla? Why Tesla?
Fuck, burn Tesla. Jesus Christ. Stay the fuck away from that nuclear bomb. No, my suggestion and my point and how I've sort of done my investment strategy has been to pick infrastructure plays, totally unsexy. United Rentals has been one of my biggest earners. Occidental Petroleum, energy companies that are producers, not necessarily explorers. That's something you're hoping on a wish. As the boys were saying earlier, maybe gold producers they're doing royalty schemes.
Exactly. Yep.
Things that are going to come through the door, things that are going to pay dividends. And also, I'm a fan of commodities, but probably not in the same way that Vishal and TK are. I think they're willing to buy paper. I'm not. I would rather, if I'm doing commodities such as silver, go out and buy the fucking silver. Especially in the economy that we have right now.
Oh, yeah.
You never know when shit's going to fall apart, and you may actually have to use it as currency.
Yep.
And you've always got it. You own it. It's not something that is just a piece of paper, and it builds value. It just builds value.
I'll quickly say this, Galen, and again, I'm not trying to be controversial, and obviously you want people to do their own research, but whenever people ask me, hey, if there's one thing to invest in, and I always tell people, physical silver is the one thing. If I had to start all over again, like right now, it would be physical silver that I'd be investing in. That would be the one asset that I would be buying. That's just me.
Absolutely, it's easy to keep, easy to store, and as I said, it's easy just to use.
True.
So it's not gold. Gold is difficult to fucking keep and store because you got to start thinking about security, and then how are you going to shave it off at the grocery store to pay for your goods? So yeah, it's best, I think, just to hit up for silver, as Vishal was saying. Now, all of that said, want to remind everybody that none of us are investment professionals, and please do your own due diligence. Don't listen to us idiots. Of course, you should listen to us idiots, but still do your homework, because the market is fucked, man. Anyway, have a good week. We will see you next week. It's been great talking to you, and thanks for coming out, man. I'm just about to set everything up, cue us out, so we can actually get the heck out of here.